All right, so let's say you're a new investor. You just joined a platform like Robinhood, Webull, or something like that, and you want to drop in $100. What are the best stocks to buy for $100? Now, and in this video, I'm going to give you two ways to approach the market. There are short-term investors and long-term investors. Um, so I'm going to start off with short-term investing. Now, before I start this video, a lot of people want to talk about options and day trading. I don't recommend that if you're a new investor. I really, really, really don't. And I'm going to be strong about this because I've seen so many people fail in the market because of it. Options is something that's really complicated. If you're a new investor, you need to get the heck out of that mentality and not do it. You're not going to succeed. Okay? You have to learn a lot of things about the market before you try that. There are so many videos out there that get so many hits, and I see like so many poor people fail in the market and lose a shit ton of money. So understand that if you go that way, you're most likely going to fail in the market. There's a huge chance that you're going to fail. There's only a 1% chance that you're going to succeed. So I recommend you guys, if you guys are going to try day trading and learn day trading and swing trading, I would recommend a stock like Ford. And why Ford? Because it's a fairly safe stock to day and swing trade. Now, your profits won't be huge, they'll be a couple of dollars, but again, it's a way to practice how to read the candles, the markets, all that stuff. So, again, also Ford, it's a safer stock, which means that if, let's say, you buy it at a high point and you don't catch the swing trade or day trade, then eventually it's going to come back up to that similar price. So, you can hold on to it long enough for you to make that money back. Day trading stocks usually have a moment of spike, which means, if you don't catch it, you lose a lot of money and you'll lose that money. With Ford, at least you can recover some of that money back or eventually, within a few months, gain a little bit more. So, again, try Ford, look at its patterns, and if you're going to try it a day in swing trade, try Ford. Okay, so if you're an investor, if you want to make profits long term, if you want to learn about the market and actually succeed, I recommend you guys investing, which means keeping the stocks long term. Now, again, you have $100, right? A stock I'm going to recommend is AT&T. Now, I know AT&T has been a little bit in the dumps lately. Their CEO or CFO, I think, is retiring, and a bunch of new people are just going to start coming into the company. Um, they do have a lot of potential. They've kept strong. Again, they've gone through so many things and they've survived. They've increased their dividend for 36 years, which means they've been a great company for that long. Right now, it's at one of its lowest points. So again, it's a good time to buy. So let's just do a quick math here. And I know the returns aren't going to be the greatest, but it's better to actually get some return than none and learn how to eventually build that up. So you have $100, right? With, let's say, I would say for this to get four stocks, I would recommend you guys getting four stocks, which at the end is going to be about 113 at this price. It might go lower, so you can probably buy it at a better price, but for the moment, it's 113 for four shares. Now, for these four shares, AT&T pays a dividend of 52 cents. Okay, and that's per quarter. So that's per quarter. What does quarter mean? It means every 3 months. Okay, so every 3 months, you're going to get 52 cents per share. Okay, so if you have four shares, at the end, you're going to get $2.08. And that's going to be every quarter. So you're going to get that per quarter. So at the end of the year, what is this? Sorry, you're going to get for $8.32 per year. So at the end, for investing your $113, at the end of the year, you're going to get an interest of $8.32. Now, I know it doesn't seem like a lot right now, but if you set up a system, let's say you invest $10 every month. So you set up an automatic payment of $10. And I'm pretty sure you can do $10 a month. Anybody can, unless you don't have a job or something. But if you're a new investor, I'm sure you can do $10 a month. So if you're investing $10 a month, at the end of the year, you invest about 120, and at that time, you can buy another 4 shares. So in a year, you'll have 8 shares. You know, so by the end of the year, you're by the beginning of next year, then you've already doubled, and then you can reinvest this back into buying more shares, which will give you a little bit of more shares again. At the end, you're gonna want to compound everything and build everything. So this is the plan that I think you should approach. Start off. If you don't have a lot of money, this is the best way to start. And at the end, you're going to see how it's going to keep adding up. When you get more dividends and you keep reinvesting, you're going to be getting more and more shares. By next year, you know, you can do the same pattern. And because you're getting more dividends, then instead of having 8 shares, instead of doubling your shares, so instead of having 16, you're going to have 17. The next year, it can double again depending on the price, and you can just keep compounding and compounding and compounding. And within a few years, when it starts buying a stock of its own, when you reach around the price that the stock is, then it's going to be buying stocks of its own every 3 months, and by the end of the year, you're going to have 4 more shares, and that's going to be building up within by just investing $10 a month with what you initiated with the 113 by year, it's usually by year five or six where things are going to start kicking off. And I know it seems like a long time, but again, this little amount of money initiated with 113 and adding 10 months every month, it's going to add up so it can buy itself. And every 3 months, you're going to buy one stock. Then eventually, when it gets to the price, of like, let's say 50, then you're going to be buying two every 3 months. And that's how you're going to be building your portfolio. So this is pretty much what I want to teach you guys. Your $100 plus the $10 a month can really, really add up. And I know it doesn't seem like a lot, but it has to start somewhere. And I recommend you guys starting like this. This is the best option. And honestly, just give yourself time. Again, you don't have a lot of money, but you have enough to invest. Start out somewhere. If it's slowly growing, at the end, you're going to see how much it's going to build. And you're not going to regret it. Because I was an 18-year-old kid. I wasn't thinking that I was going to make a lot of money. I was like, I just want my $8,000 to, become $20,000 in like 10 years. I was wrong. That $9,000 became a crap ton of money. And I can say that I can retire now without even struggling in life. And I'm not going to say the amount I made, but I made more than enough. Okay. I am 29 years old now, and I live off well. I make enough money, again, like I said, to retire, and going this way, I can live off for the rest of my life. And you guys can too. I grew up in the ghetto and stuff like that. And, I didn't grow up with a lot of money, but I pushed hard. I ended up getting a second job just so I can invest. And I made those $9,000 into something really, really big now. And that was all just because of dividend stocks. So, best way to approach it, just start off and you'll be good, guys. But that's pretty much it, guys. If you guys have $100, best way to go. I hope this video helped. If you have any questions, please comment down below. I'm open with anything. If you guys want to know how much I actually made in the market, please put it down in the comments below, and I'll let you guys know personally. But I just don't want to say it out here and stuff. But again, thank you guys for watching, and I'll see you guys in the next video. So peace out.